But Jared Blikre, the bid ask for Uber is getting a little bit tighter and falling. Jared?
The bid has now fallen to $43.50 and the ask is at $44.50. So that is a spread of $1 now. That was just at 50 cents and it has been trending down. So that indicates that there's a little bit of hesitation and uncertainty in this market. Certainly not helping that the Dow itself is down over 1%. This could be a protracted process. We want to see this spread narrow again to at least 50 cents before we're even close to that first trade. Just really the fact that it's under the price, the IPO price of $45 is pretty indicative here. And Rett's comments about the stabilization agent whose job it is to make sure that the IPO day goes smoothly and that trading goes smoothly, we're spot on. They may have to step into the market here shortly after trading. It's going to be a very interesting day for Uber when it finally starts trading here.
So what you're saying is it said it was 5 minutes away, and now it's actually 10 minutes away. That sounds familiar about, about
we waited
what
10 years for
with,
it. So.
About what happens with Ubers. I want to go now to Ines, who's, of course, on the floor of the New York Stock Exchange with the latest there. Ines.
Yeah, I'm here with Tim Anderson from TJM Investments, and we were just talking about this indication. Now we're seeing it at $43.50 to $44.50. What do you make of this?
Well, clearly there's plenty of stock for sale in the marketplace, and I think there's not enough buy interest at the new issue price of 45 right now to have it open at 45. I think the weakness in the market certainly is going against them a little bit, but I also just think that there has been some nervousness building the last few days about how this deal was going to be received by the market. And even though there could potentially be a large syndicate bid at 45 or lower, that they're probably going to try to open this as soon as possible, because now they're a little nervous that the longer they wait, the indication might go lower, particularly if the market continues to sell off.
Okay, Tim, thanks so much. So, guys, we're looking at an indication of $43.50 to $44.50, and Tim Anderson was just with us, just commenting on that. Back to you.
And as we see that range widen out again and also go lower, I want to mention what's going on with shares of Lyft today. As we've been talking about, the overall market's falling on trade, but then there is the case of Lyft, which is now down about 8%. As we know, it's already off about 20% since its IPO. So now with these jitters around Uber potentially opening below the IPO price, there's obviously some contagion here.
Contagion, but is there a possibility that the hype over rideshare and the potential for growth, that people don't want to wait the many years it's going to take for autonomous vehicles, for the elimination of the drivers? We know that's Uber's ultimate plan as well as Lyft's. That's what we're seeing because we're watching Lyft fall and we've just seen the bid for Uber fall.
I've got to imagine that the CEOs of both companies had this conversation with institutional investors. They said that it's going to be a long path to profitability. The CFO of Lyft, I think 2 days ago, Brian Roberts said, 2019 is going to be our biggest loss year, which is maybe not the greatest language you want to hear from a CFO, but really pointing to we've hit bottom on how we're spending and now we're going to get to profitability. What I actually am surprised no one's really covered too much today is we have an example with Dropbox, which is a company about a year ago when people talked about mounting losses. Is this company going to really thrive and survive? And actually this quarter posted positive earnings. Kind of shows a bit of a playbook of what you can do if you do commit to a plan and execute on kind of shredding those losses.
Do you agree with that?
I mean, I do agree with that. The Dropbox instance is really, I think, powerful, but not that analogous to Uber, right? We know what a Dropbox is. We know what it does. We could see the trends over time. It's important to be above the line and not below the line. But I still think, one of the things about Uber that is really interesting is we talk about the drivers as if all they do is drive. But they actually buy the cars, maintain the cars, fuel the cars, clean the cars, take them home at night and store them, right? And so we haven't seen what that looks like in a new world where the cars are autonomous. Who does all that? Right. Is Uber going to be a hardware company like GoPro? Or is it going to be a marketplace asset-light business? And we don't know these things. So I think that having visibility into the long-term mousetrap, whatever that mousetrap is going to be, is something that helps Dropbox and probably hurts Uber today. Even if you believe that people aren't going to own cars, will take ride sharing instead of owning their own thing or taking city transportation, right? You can be a macro bull on this and still be uncertain in the short term about what the right price should be today.
Yeah, I think that's a really good point. Go ahead.
Yeah, the scale is also completely different with Lyft and with Uber than it was for Dropbox, but also even Amazon. I mean, Amazon was losing money when they IPO'd too, as a small online book selling company.
Oh, what can they do besides sell books on the internet?
I mean, Uber had $3 billion in losses from operations as of 2018. So, you think about not only the fact that these are still money-losing operations, but they're money-losing operations this late into going public.
Well, so the difference, though, there that I think is important is Amazon went public with $14 million of trailing revenue. Right, so it was a totally different animal. I mean, Uber did more than $14 million of revenue while we've been sitting at this table. It's just a much bigger thing. The loss profile, especially when we see the annualized losses going from $3 billion to $4 billion, is something that you're going to be concerned about. But again, it's such a big opportunity that, and I think also the management team is so good. Right, the Uber management team is just terrific, right? And so if they are able to deliver against this opportunity at all, this is a huge company. It almost can't work unless it's huge.
All right, we're going to put a pause on this and talk about one man who is poised to make quite a bit of money from this Uber IPO, no matter really where it trades today. We're talking about Masa-san, and Aikiko Fujita has been looking at the SoftBank angle for all of this.
Yeah, Julie, it's interesting to hear that conversation about just how patient investors are going to be as Uber looks to this road to profitability. Masayoshi Son has made it very clear he's making investments for not just 100 years, but perhaps 200 years. And when you look back to its Uber investment back in 2017, SoftBank's Vision Fund took a roughly 16% stake in the company for $33 a share. That valued the company at $48 billion. So regardless, you do the math here, regardless of where Uber shares start trading today, he's looking at a big windfall on this IPO day. He has placed bets on nearly every market leader globally. So he's not just looking at Uber, he's looking at Didi in China, where he's made investments there, Grab in Southeast Asia, Ola in India, and then 99 in Brazil, which was acquired by Didi last year for $1 billion. And that has often worked to the detriment of Uber in some of these very competitive markets. You look at what happened in Southeast Asia last year. Uber agreed to cut its losses and sell its business there to its chief rival, Grab, for a 27.5% stake in the company. So they had to eliminate their footprint there. In the case of Latin America, SoftBank's funding into Didi has slowed growth for Uber. This was a huge growth market for Uber, but since Didi has entered the market, their growth has gone from 215% in 2017 to 22% in 2018. And then you've got markets like Australia. Uber has had a dominant position there. Well, last year, Ola, which is also backed by SoftBank, chief rival of Uber in India, they entered the market as well, making this a very crowded space. And SoftBank's investments in Uber rivals aren't just limited to ride sharing. They led a $535 million funding round in DoorDash last year, which of course competes with Uber Eats. So SoftBank has really been backing these key players. Masayoshi Son has talked about his big bet really is on autonomous driving. That's going to reduce costs, he says, and that's really going to be the big play for SoftBank's vision.
Of course, there are still a lot of questions about what that will look like. To Rett's point earlier, just want to mention we have a new range, 42 to 43, the new trading range that we're talking about here for Uber. So again, going down and still just as wide. Ines, Ferre, let's go back to you on the floor of the New York Stock Exchange. Is the buoyancy down there on the floor coming down a little bit?
Oh, yeah, Julie. So we're looking at the indication now of 42 to 43. Tim Anderson with me here. Tim, we're watching this lower. What's happening?
Well, clearly they're trying to match up buyers and sellers at a price where they could get the stock to open and then start to trade freely in the market. And right now they're looking for more interest on the buy side.
There seems to be nervousness here, though.
Yeah, sure. Because now there have been times in the past when IPOs have opened below their price and then within a day or two recovered back to their price. A lot of people do tend to buy IPOs on occasion with the idea they're just going to flip them on the opening and at a higher price, and probably well over 90% of the time that does work. But if that doesn't happen, many times they will just say, well, I'm just going to sell this one and I'll go on to the next deal.
Now, Lyft is under pressure right now. Is this adding pressure to this?
It's certainly not helping, but we really don't know how many people necessarily are selling positions in Lyft today because they're buying Uber today. That probably would have gone on over the last month, maybe.
Investor nervousness?
Yeah, sure, because the market is pretty close to its lows of the day, and you're going into a weekend, so a lot of the market's probably not going to have like a sharp recovery late in the day. It might pare some of its losses, but there's just nervousness about where the real buy interest in the aftermarket's going to be for Uber after it opens.
And you were mentioning earlier that we could expect an opening soon because they don't want that price to be...
I think that they would like to open it sooner rather than later. And if it has to be flushed out at a price below the deal price, so be it.
Thanks so much, Tim Anderson. And back to you, Julie Adam.
Okay, Ines, we're going to keep an eye on this. Want to get out to San Francisco. JP Magdalinden, there's a lot of people who've been associated with Uber who have left the company in addition to people who are going to make money today. What do you have for us on this?
Sure, Adam. As we look ahead to Uber's IPO today, it's worth noting just how rocky Uber's history has been over the last 2.5 years. Over the last 2.5 years alone, Uber has seen over 24 high-level executives and employees leave the company, from Travis Kalanick, the former CEO and co-founder himself, to a number of engineers back in 2017 who worked on Uber's self-driving car division. If we take a look back, and I think Yahoo Finance, we had this great graphic that ran yesterday that listed all the nearly 30 departures from Uber. If we take a look back, we could basically bundle these departures into 3 or 4 buckets. The first one would be around 2017 when you saw like 4 engineers leave from the self-driving car division. The second bundle would be associated with a scandal back in early 2017 when Uber software engineer Susan Fowler wrote this, very watershed post. This post for the New York Times, basically, or not for the New York Times, wrote this blog post alleging sexism at Uber, and that triggered, of course, scrutiny from the media, internal criticism, internal investigation led by Arianna Huffington, who was a board member, and that triggered like a number of departures. They lost Amit Singhal in February 2017 for failing to disclose a sexual harassment allegation. They also lost TPG Growth board member David Bonderman, who resigned in June after he made a sexist remark at an Uber all-hands meeting. And then you also saw, Anthony Lewandowski, a top engineer who was working on Uber's self-driving efforts. He left or was fired in May 2017 after months of controversy. Google had basically, as we might remember, sued Uber, or tried to sue Uber over allegedly stealing trade secrets. So, it's been an interesting 2.5 years for Uber. It'll certainly be, even more interesting looking forward.
JP, thanks so much. I love the credit sequence of all the people who have left Uber. So to Rhett's point earlier, the management team's strong now, but it's come after a lot of turmoil.